Hello and welcome, fellow investors in Singapore. It's Iggy from Investing Iguana, and today, we're diving into some major news that's shaking up the market: AEM's recent downgrade to hold by UOB Hian. In this video, AEM Downgraded, Decoding AEM's hold downgrade, I'll unpack the details behind this significant shift and what it means for you. We'll explore the reasons behind the downgrade, including inventory issues and its impact on AEM's financials. If you're an investor in AEM or considering it, this analysis is crucial to understand the new challenges the company faces and how it could affect your investment decisions. So, let's get right into it and decode what this downgrade means for AEM's future and for your portfolio. On January 2024, a noteworthy event took place in the financial world. UOB Hian, a well-known brokerage firm, decided to change its rating for AEM, a company that has been under the spotlight recently. The firm downgraded AEM to a hold status. This is a significant move, and it's important to understand what this means. A hold rating is essentially a neutral stance. It suggests that the analysts believe the company's stock is fairly valued at its current price. It's neither undervalued, a buy signal, nor overvalued, a sell signal. So, when UOB Hian downgraded AEM to a hold, it indicated that they believe the company's shares are priced correctly given its current circumstances. This decision didn't come out of the blue. It was a response to some challenges that AEM has been facing. These challenges have raised concerns about the company's future performance, leading to this downgrade. As an investor, it's crucial to understand what this means. Understated cost of sales. Let's delve into the recent events surrounding AEM, a company that has been in the news due to some significant operational issues. AEM, during its transition to a new production facility located in Penang, encountered a major problem. They discovered that their inventories were not as they should be. This wasn't a small oversight or a simple miscalculation. It was a serious human error that went unnoticed until it was too late. This error is not something that can be brushed under the carpet. It's expected to have a considerable negative impact on AEM's financial health. Specifically, it's going to affect the company's earnings. When we say it's going to affect the earnings, we mean it's going to cause a substantial dent. In the fourth quarter of 2023 alone, this error is projected to cost the company around 22 million Singapore dollars. This massive figure is due to the cost of sales being understated. In other words, the actual cost of producing the goods was higher than what was reported, leading to this significant financial hit. This situation serves as a reminder of the importance of accurate inventory management and the potential consequences when things go wrong. The inventory issue that AEM has been grappling with has had a significant impact on the company's financial outlook. UOB Hian, a prominent brokerage firm, has responded to this situation by revising AEM's earnings forecast downwards. Initially, AEM was expected to make a profit of 14 million Singapore dollars. However, due to the inventory problem, the company is now projected to incur a loss of 6 million Singapore dollars for the year 2023. This is a substantial shift from profit to loss, and it's a development that investors should be aware of. As we look further into the future, specifically the year 2024, the outlook doesn't seem to improve much. The earnings forecast for AEM has been reduced by 17%. This reduction is a direct result of the inventory issue that the company has faced. It appears that this incident has rattled investor confidence in the company. There is now a sense of uncertainty surrounding AEM stock. This uncertainty is expected to persist in the near to medium term, making it a critical factor for investors to consider when making investment decisions. This situation underscores the importance of effective inventory management and the potential financial implications when things don't go as planned. The financial outlook for AEM in 2024 is not particularly promising, according to the full-year revenue guidance. While a recovery is expected, it's not anticipated to occur until later in the year. This delay in recovery means that the company's financial performance for the majority of the year may not meet expectations. In response to this less-than-stellar outlook, UOB Hian, a reputable brokerage firm, has made adjustments to its target price for AEM. They have reduced it by 16%, bringing it down to $3.06. This adjustment reflects the firm's assessment of AEM's future performance given the current challenges it's facing. So, what does this all mean for you as an investor? Essentially, it's a time for caution when it comes to AEM. The company's inventory issue has had significant repercussions on its financials and has shaken confidence in its stock. This has created a period of uncertainty that is expected to persist for some time. As an investor, it's important to stay informed about these developments. Understanding the impact of these issues on AEM's financial performance and stock price can help you make informed investment decisions. It's crucial to consider how these developments align with your investment strategy and risk tolerance. If you're uncomfortable with the level of uncertainty or the potential risks, it may be wise to reconsider your investment in AEM. On the other hand, if you believe in the company's long-term potential and are willing to weather the current storm, you might choose to hold onto your investment. Ultimately, the decision is yours to make. Let's take a closer look from Iggy's viewpoint at what the recent developments could mean for AEM in the upcoming year. Inventory shortfall impact. AEM has recently faced a significant challenge. During the transition to its new production facility in Penang, the company discovered a shortfall in its inventory. This issue was not a minor glitch, but a substantial problem caused by human error. The impact of this error is expected to be quite severe, leading to a negative effect on AEM's earnings to the tune of around 22 million Singapore dollars in the fourth quarter of 2023 alone. This is a considerable financial setback that could potentially shake investor confidence in AEM's operational efficiency, at least in the short term. Earnings forecast revision. The repercussions of the inventory issue are clearly reflected in the revised earnings forecast for AEM. The company, which was initially expected to make a profit of 14 million Singapore dollars in 2023, is now projected to incur a loss of 6 million Singapore dollars. This drastic shift from profit to loss is a clear indicator of the immediate financial impact of the inventory shortfall. Looking ahead to 2024, the earnings forecast for AEM has been further reduced by 17%. This suggests that the company's path to recovery might be more cautious and gradual than previously anticipated. The lowered forecast indicates that the effects of the inventory mishap are expected to linger, affecting the company's financial performance even in the next year. Stock confidence concerns. The inventory issue that AEM is currently facing is expected to have a significant impact on the confidence of investors in the company's stock. This is likely to be felt in the near to medium term. Given the uncertainties surrounding the company's financial performance, investors may choose to adopt a wait-and-see approach. This could lead to a decrease in trading volumes as investors hold off on buying or selling the stock until there's more clarity about the company's situation. As a result, the price of AEM stock could become more volatile, fluctuating more frequently and to a greater extent than usual. 2024 revenue guidance. Looking ahead to 2024, the full-year revenue guidance for AEM doesn't paint a particularly rosy picture. A recovery is expected, but not until late in the year. This suggests that the company's financial performance over the course of the year may be lackluster. As a result, AEM might not be a high-growth stock in the immediate future. Instead, it could be seen as a long-term play for patient investors who are willing to wait for the company to overcome its current challenges and start growing again. Target price adjustment. In light of these developments, UOB Hian has adjusted the target price for AEM. They have lowered it by 16% to 3 Singapore dollars and 6 cents. This adjustment reflects the market's recalibrated expectations from AEM given its current challenges. While the reduced target price could potentially make AEM an attractive buy for value investors, it's essential to consider the potential risks associated with this investment. The time frame for recovery is also an important factor to consider. It's crucial for investors to stay informed about these developments and consider how they align with their investment strategy. And that's a wrap on our deep dive into AEM's recent downgrade. We've covered everything from the inventory shortfall to the revised earnings forecasts and what this could mean for AEM in the near to medium term. It's clear that while AEM faces some significant challenges, it's also a time for cautious consideration for investors. If you found this analysis helpful, please hit that like button and consider subscribing to Investing Iguana for more timely and insightful market updates. Your support helps us continue to bring you the latest in investment news and analysis. Don't forget to share your thoughts on AEM's situation in the comments below, and let us know what other topics you'd like us to cover. Until next time, keep analyzing, stay informed, and invest wisely.